Hi everyone, welcome guys to this live show that's happening right now. Thank you so much for joining us. I think some of you have already joined us. Welcome guys to the One Good Trade live show that's happening right now today. Just let me know guys, just type a one in the chat so that I know that this live show is working right now. And I have a very special guest today. I'm going to introduce you guys in a bit, but just type a one in chat. Let me know if this live is actually working. I think we can see your comments. Andy, good morning. Let's see who is here. Sui, good morning as well. Hi, Stephen. Good morning. Type a one, type a GM for good morning, guys. If you can see, you can hear me, and you can also see my screen. Let me know. All right. Let's see who is here today. We have Ji Sing Wan. Thank you so much, Ji Sing. Hi, Carol, Zaihuni. Let me just take this opportunity to acknowledge all of you for just being early. Hi, Colleen. Bonnie. Hi, Carol. Good morning. Catherine as well. Good morning. One. Awesome, guys. So welcome to this live show, guys. And this is a little bit different from our usual weekly Friday Ask Me Any Stock session that I do with my team, right? Today is slightly different. Today will be not about covering the stocks that you guys want, all right? If you want it, you can join tomorrow, and tomorrow we'll be covering like the US market, right? But today, what happens is that this title of the show, right, is called the One Good Trade live show. What is this show about? Well, essentially, I'm going to show you guys one stock, right? And in today's show, right, I'm going to show you guys one Chinese tech stock that I've not talked about over the past couple of months, right? We have seen some really good moves, really good bullish signals, and I'm going to share with you guys this one good trade, right, on this Chinese tech stock that you probably want to put in your watch list as well. And of course, I have a very special guest right here called, Jamie from Macquarie, who will be sharing with you guys as well after I've done my analysis on this stock as to how all of you can actually take a position, all right, and potentially increase your returns, your ROI, all right, by using this very, very special tool, all right? So I'll leave that to Jamie to share. And so Jamie is right over here. Maybe Jamie, just going to introduce yourself, all right, and share with us what you'll be covering today a little bit. Go ahead, Jamie.
Hi, Joey. Hi, everyone. I'm very excited to be invited onto this show again. The last time we did this show was on the 21st of November, 2024. So it's been a while. We've taken, the New Year break, the Chinese New Year break, and I love being on this show. So before this show, for example, I'll get texts from relatives, that I see too little of, and they'll tell me that they're actually going to be on the show. So it's nice that I get to chat with them a little bit more, talk about markets a little bit more, talk about the product that I cover, Warrants, a little bit more on this show. So thank you for having me on this show, Joey.
Awesome. Very good. I'm very, very happy to have you here as well. All right. And can't wait for you to share with us as to how, based on this Chinese tech stock that I've been watching over the past couple of months, right? How do you actually, increase the ROI? All right. Very interested to learn a bit more in depth as well. All right. So let's go to get started.
Joey, if I may interrupt, just to do a bit of a recap, especially for those who previously tuned in November 2024, where you covered SGX, or even for those who did not tune in, I guess, it'd be nice if you could maybe take us through a little bit about your previous view on SGX and whether SGX did hit your target levels and what happened over there, where you exited and the kind of profit or the kind of loss that you cut. Could you just take us through that?
Definitely. Yeah. So I think in November, we had this one good trade live show a couple of months back, right? And I talked about this stock called SGX. Probably some upside targets was drawn as well. So later we can take a quick look at SGX for a quick one. Maybe you can do a quick recap as well as to what happened to that position. All right, if you would have taken a position on SGX using warrants, and after that we can talk about this Chinese tech stock. All right. And what to do with it. Okay, very good. Yeah, I'll talk about SGX in a bit. So let me just go ahead, guys, to share with you guys a little bit. First, just a quick disclaimer, whatever they share in today's live show, it's just for education purpose only. So please do your own due diligence, all right? It's not to ask you to buy or sell or not to buy or not to sell, all right? Please do your own homework as well, all right? The standard disclaimer that we have to share, all right? So very quickly, let me just go ahead to pull out my chart, right? And let's talk about SGX. So I think in November, I think somewhere over here, let me just show you, I think somewhere over here in November, I think right over here, I did a live show with Jamie, all right, a couple of months back, the same one good trade live show. And I talk about this stock called SGX, right? Singapore Exchange, right? And let me just go to turn on what we call the 1GT Pro indicator. So for those of you who have been following me on YouTube and stuff, essentially I have this one good trend strategy that I've been using for more than 10 years now. All right. And based on this strategy, I have an indicator, all right, whereby with a click of a button, it comes out with bullish green signals or even bearish red signals. So it guides us on when to get in, probably when to get out as well, especially if you see a bearish signal. So I think in November, right over here, Jamie, I think somewhere over here, I think I talked about SGX, some targets will have, I think some targets were drawn as well, maybe all the way to like 13.50, but I think it's gone up all the way to like $14. And then we saw, prices dipping a little bit right now. Correct, JB? So maybe you could share with us, like, based on when we first covered it around that 1170 level, 1180, and right over here, all the way to like about $14, about 18% upside, right? Just from the underlying as well, about 17% upside. I'm not too sure how the warrants did. I think probably the upside would be more. Yes, hit our targets. In fact, gone above our target. Our target was 13.50, gone to like $14. So I think maybe Jamie, I'll leave that to you to share how did the warrants for this SGX did.
Yeah, first of all, well done, Joey. It was a good call there. Indeed, if I may share my screen, this is the website warrants.com.sg. And what we did previously was we zoomed into the SGX warrant. The warrant code was, just give me a second. The warrant code was WJTW, and that was what we looked at on that show on the 25th of November, where we did a bit of simulation on what the warrant will do. So turns out on 7th of February, your price target then, Joey, was $13. SGX was trading around $12.50 on the day of our show. It had already gone up, I remember you saying, and you had a target level of between $13 to $13.50. So we did a bit of simulation on what the warrant would do. Now, this is the actual warrant performance. If an investor, had been looking at the warrant on the 21st of November and had entered the warrant at 8.3 cents rather than $12.53 on SGX. It had gotten out exactly at where you called it. Of course, this one, it went even higher, right? Because the day before actually closed below $13, so not quite at the profit-taking level. But in this case, gapped up close to $14 and I think anybody would have gotten out because it really hit within your target levels and beyond, right? Of 13 to 13.50.
Nice.
In this case, it had gone up 11.7%, really impressive over about just 2.5 months. And in this case, the warrant would have gone up from its 8.3 cents to 12.9 cents, which is a 55.4% gain.
Wow,
so it had gone up 5
55.4%.
times more. And I think that's the whole point of, you inviting me on this show to show investors, your listeners and your followers exactly how they can use an instrument like warrants to magnify their returns, in this case, 5 times more, and achieve a greater ROI with the same view that you have.
All right, thank you so much, Jamie. Wow, I did not know. I thought it was like about 30 to 40%, but you can see that the warrant has gone up. Underlying 11%, warrant gone up by 55%, right? So that's how, guys, Jamie will actually share with you later after I talk about this Chinese tech stock as to how, all right, we are able to increase our ROI using what we call warrants, all right? So maybe I can just go back to share my screen again for like SGX just to do a quick recap of what's happened, right? So in November, I covered it with Jamie in the live show. I talked about targets being about $13. Yes, passed my target, went to $14. And you can see that over the past few weeks, in fact, past 1 or 2 weeks, we actually saw a bearish signal coming out. So a little bit of weakness, right? Hopefully you've got out, take some profit, but we got a bearish signal coming out. And you can see that right now, the 20 days moving average line has started to turn down a little bit, right, for SGX. So a bit of short-term weakness, all right? We probably want to wait to see a bit more stability, wait for the short-term trend to turn back up, all right, before maybe thinking about entry again. All right, you can see that the longer term trend is pretty good. Look at the red and the blue line, 100 days moving average and the 200 days moving average. Both of them are pointing up. So longer term trend is fine, no problem, right? Very good. It's been up since like last year. But the short term trend, you can see, right? It was down in December, right? All the way down. Even right now, it is starting to point down as well with a bearish signal. So I think, let's monitor for a while. Maybe for a re-entry, we want to see some stability above the $12.50 support. Maybe a new bullish signal coming out again, like what we saw in November, what we saw in August. I'm not too sure whether it'll come out when, all right? But if it does come out right over here, maybe in the next 1 or 2 weeks, the short-term trend turns up. Yes, that would be another confirmation, right, to think about getting back in. All right, and that's what you could do as well. You can think about taking a position using warrants to potentially increase your ROI. All right, so that is pretty much just a quick recap of what we have talked about in the previous One Good Trade live show in November with Jamie. All right, and let's move on. Right, let's move on, guys, to the stock. This Chinese tech stock that I'd like to share with you guys today. Just do me a favor, guys. Just type T for top if you want me to share with you guys this top Chinese tech stock, all right, that has been on my watch list for a while, all right, probably not what I've covered in the past few months. Just type T for top. You want me to share with you guys this top stock? Let me know. All right, T for top. Thanks, Colleen. T, Serena, T as well. Awesome. So I'm going to share with you guys this stock right now called JD.com, right? So I think some of you may have heard me covering on my articles as well, maybe some of my YouTube videos as well on like Alibaba, Tencent, Meituan, some of the very good tech names as well. But today, all right, I'll be focusing on this stock that's listed on the Hong Kong Exchange, right? The code is 9618, right? 9618. Let me just show you right over here. Name is JD.com, right? JD.com. Let me just pull up the name right here, right? So yeah, JD.com, stock code 9618.HK. So I'll just do a quick analysis as to what has happened for the Chinese tech sector in general over the past 1 to 2 months. In fact, since the beginning of the year, we have been seeing strength. What is the reason before we even talk about JD.com, right? So I think all of you who have been following the news, right, that since January, somewhere around like January, we had this headline news about this new AI startup in China that is called DeepSeek, right? DeepSeek. How many of you have downloaded the app? Just type me, guys, if you have actually downloaded this app on your phone. All right, just type me in chat. All right, so this app, DeepSeek, all right, essentially is a Chinese AI startup. They launched their AI model called R1 that is comparable with OpenAI ChatGPT. And the thing is that it only costs like a fraction of the cost to build it. And that's where it triggered a lot of valuation upgrade or re-rating in terms of the Chinese tech sector, because now a lot of people are back to focusing on AI, back to focusing on the Chinese tech sector, right? Because of this valuation upgrade, right? And many of those technology companies in the US, even Alibaba is also spending billions of dollars into AI as well. And what happens was the mainland Chinese investors, they have plowed about US $35.9 billion in the Chinese tech stocks, I would say, over the past few months. And this is like a re-rating of some of the biggest technology companies in China. All right, so we have Alibaba, Tencent, Xiaomi, all starting to push up. All right, I'll not be talking about these stocks today. I'll be focusing on JD.com. And one of the key reasons would be DeepSeek. All right, as I say. But the next thing would be due to the Chinese government as well. All right, starting to put a bit more focus. All right, on the Chinese tech sector. So if you remember, right, about 3 to 4 years back in 2020, 2021, there was a crackdown on the Chinese tech sector, right? Even the Ant IPO that Alibaba wanted to launch, right? It was cancelled, it was dropped, and many of the tech stocks were just coming down and down and down. That was in 2020, 2021, right? But now it's a slightly different, right? Just last month, right, we had the Chinese President Xi Jinping actually meeting some of the top Chinese entrepreneurs like Jack Ma from Alibaba, Pony Ma from Tencent as well, and saying that showing their support for the Chinese technology sector. And just last week we have this National People Congress in China as well, whereby Chinese Premier Li Qiang actually announced more support for the entire AI technology sector, the EV space, the 6G technology, and they are going. I mean, basically, it's just a shift in government, the Chinese government direction. They want to offer more support, and this gave a lot of confidence as well, all right, to this Chinese tech sector. So it's a bit different. It's a bit different from the US tech sector like Nvidia, Micron, or AMD. All these are still seeing weakness, but on the side of the Chinese tech sector, it is the other way around, right? We are still seeing a lot of strength, right? So that's the reason why I would say we are seeing strength in the Chinese technology sector. But let me go ahead right now, guys, to share with you guys on this stock called JD.com. So you can see, right, as I say, right over here, I have this one GT Pro indicator. So if you want to find out, guys, a little bit more in terms of like the entire strategy, how does it work? Why do I have this indicator whereby in a matter of seconds I can just turn it on and I can turn on the buy and sell signals and it guides us on entry and exit. If you want to find a bit more, you can attend more of those free webinar. I'll just place the link in the chat, or I'll just place the link in the chat. Check it out, attend one of our free webinars where I share with you guys a bit more on the strategy and also this one GT Pro indicator, right? So I've just placed the link in the chat. You can check it out. But look at this right over here, right? For JD.com, the code is 9618.HK. You can see, right? I'll not go too far, but since last year, right? Last year, a bullish signal coming out right over here, another bullish signal. It starts pushing up by about 20-30%. Got a bearish signal. It starts coming down. And I think it really started somewhere around September. Look at this, right? A very good bullish signal starts pushing all the way up. A bearish signal started to come all the way down, right? So for JD.com, you can see that the longer term trend has actually started to turn up, all right? Has turned up, I would say, since last year, around like June to July, just by looking at the rate and the blue line. So you can see when 100 days moving average, the red line is pointing up and the blue line is pointing up and the red is above the blue. I would say that the longer term trend is up, all right? But it doesn't mean that the longer term trend is up means the short term trend will always be up, right? No, right? Why? Because you see, right? Right over here in November, October, we saw the short term trend turning down, right? Even here, right? The short term trend was turning down and down and down. The green 20 days moving average line was actually sloping down. So we don't want to buy when the short-term trend is down, right? Even though the longer-term trend is up. We want to buy only when both of them are up and when we get like a new bullish signal. And that's exactly what happened, right? I would say in January, right over here, finally, right, we got a bullish 1 GT signal coming out on the 17th of January. And this green 20 days moving average line was going down and down and down, started to point up. As another confirmation. Is it pointing up right now? Yes, I would say still slightly pointing up, maybe a bit flat, but slightly pointing up, definitely not down. All right, so that's where we had a couple of bullish signals actually coming out. 1, 2, 3, 4. It seems like it is looking like a very good support level. And I would say that if I can draw this support level, we would have found over the past 1 over month, a good support level, maybe around the 150 Hong Kong dollars. You can see, right? We went all the way up to, let's see, I think a resistance level will be maybe somewhere around the 180 to 190, right over there. So I think the range is 150, all the way to maybe around the 180, let's just say to $190. So about a 24 to 25% upside if you were to get in, all right, potentially near the 150 horizontal support level for a rebound all the way to 190 to 180, about a 25% on the underlying stock. All right, you can see, right? That was where when we approached the support level, right, over the past 2 weeks, look at this, right? We got a pretty good bullish candle coming out, right? Something like what we call a hammer, right? A bullish spinning top, a doji. Each time we approach the 150, we are seeing some bargain hunting buyers are coming out and it starts pushing up and up and up, right? So now you can see that over the past, 1 week, of course, we saw a bit of weakness as well. In the US, it was a drag on the Singapore market, it was a drag on the Hong Kong market a little bit, but we are still seeing support holding pretty well above the 150. Now it's what? 158. Yeah, we're still above 150, right? It's 158. So anything near 150, it could be 154, 152, 153, 156, but anything near the 150, I think that could be a really good opportunity, especially if we see maybe like another bullish reversal candle, and that could lead the upside again, right? The fact that we have 4 bullish 1 GT signals still playing out. There is no bearish signal, as you can see, right? This stock is definitely still in my watch list, all right? A little bit different from the usual Alibaba and Tencent, Xiaomi, all right? So this is JD.com, one of the technology companies in the Chinese as well that you can put in your watch list. So let me just go ahead to invite Jamie, all right, to share with us how, all right? I mean, you could actually buy this stock on the normal Hong Kong exchange, right? That is if you buy the stock directly on the Hong Kong market. But Jamie will share with you guys how actually, right, you are able to take a position using warrants that could actually amplify your returns, right? So it would not be like a 25% return, right, just on the underlying. In fact, it will be more than 25%, more than 30, more than 40% if it actually hits the upside targets, right? So Jamie, I'll just pass on the mic back to you and to share with us how we can actually use warrants. What warrants should we choose? What are the mistakes we want to watch out for? All yours, Jamie. Go ahead.
Thanks, Joey. So, a quick introduction to warrants for those of you who are very new to it and no idea what it is. There are essentially two types of warrants, and they're both listed on the SGX, so you don't have to trade away in Hong Kong. If you don't want to leave SGX, you don't want to be exposed to Hong Kong dollar, conversion risk. You can stay invested on the SGX via call or put warrants. Now, call warrants are essentially a form of options, okay, but they are a little bit different in that sense that there's the presence of the market maker instructor warrants on SGX, and you trade using your contra account instead of a OTC market or margin account. And then more importantly, a call warrant follows the underlying to go up and increases in value, whilst the put warrant does the opposite. It goes up in value when the underlying comes off in the short term, okay, and it goes down in value when the underlying goes up. Now, in this case, if Joey was bullish, from what I'm hearing, with a target price of around 190 Hong Kong dollars, you would then, in this case, consider a call warrant. Okay, and Joey is just showing you the website, our website, warrants.com.sg. I would recommend that you open this website and use it alongside, your brokerage account whenever you're trading warrants. Why? Because our website provides all the tools required in order for you to select a warrant, to understand a warrant, but really to use the cool tools that we've invented to assist with your warrant trading. Okay, so one of those tools I want to show you and demonstrate with is called the Warrant Selector tool. And how you can access it is basically at warrants.com.sg. Go to the Warrant Tools drop down, and here it's on the second tool called the Warrant Selector. So to use this tool is really simple, just because with a warrant selection process, essentially you enter and exit based on your view on the underlying share price. The warrant is a tool meant to help you, that helps you magnify your returns, right? To magnify your exposure. But essentially you enter and exit based on your view on the stock, not on the warrant. So you don't do a technical analysis on the warrant. There's no need to do so. You stick with your technical analysis, just as Joey has demonstrated on JD.com. Right now, it's saying that JD is about $158.70. And because we're bullish, we'll click on call here. Now it brings you down to the drop down where you have to select your target price. We select the target price because that's the target price that we'll exit at. Now, if you wanted to hold on to JD for a long time because you think it remains, bullish, it looks really good, well beyond $190, right? And you think that could happen, in the next year or the next few years, then please go buy the shares. Well, you're using the warrant in the short term because based on the charts, we think that could be a close to 20% upside, and you would really like to leverage on that with a smaller capital outlay. In this case, if in this target price of 190, which is 20% higher from here, you see that the table is only showing you one warrant, 44PW. Why? Because in the warrant selection process, the other thing that you want to pay attention to is that you're only buying warrants on tight spreads. So this table already narrows down those warrants that are trading on tight spreads. Anything that has a bid and offer spread of more than 3 ticks or 0.003 is automatically filtered out. So it makes the warrant selection process neater and just more efficient for you. Now, we're interested to see how this warrant will grow based on this target view. You could enter the warrant at 5.4 cents today based on JD.com trading at 158.7. Okay, to see how it would move to with time. As JD moves up 20% from here, you simply increase the number of weeks. Right now, if you press it up by once, it goes to 2 weeks. You see that if JD moved up 20% 2 weeks from now, this warrant is going to grow from its current 5.4 cents today to 10.4 cents in 2 weeks. Now, that is a 92.6% gain, right? So about a bit more than 4 times more than the underlying move of 20%. And as you increase the number of weeks, what you're going to notice is that the percentage gain has dropped, right? Earlier, I was saying it's up more than 90%. But if JD went up by 20% in 7 weeks rather than 2 weeks, you're going to find that this warrant is going up, still more than the underlying of 3.5 times more, but it's only going to go up 68.5%, right? The reason for this is because the holding cost of a warrant, known as time decay, is starting to eat into the magnified gearing returns of the warrant. And so as you increase the number of weeks, you'll find that the returns will drop. Still geared nevertheless, meaning it's still going to generate you more return than if you bought JD shares directly during this period. But just note that the longer you hold on to it, the longer the view gets to be realized, then the smaller the percentage gain compared to if you held it for a shorter period of time. Now, the maximum number of weeks that this tool goes up to is 12 weeks. Now, in 12 weeks' time, you see that this call warrant will now only go up by about 39%, right? So that's about a 2-time return more than JD shares. There's still gearing of 2 times, but not like 4.5 times where we were looking at it earlier at 2 weeks. If you wanted to know the approximate date, of this warrant based on your view, meaning what if it took more than 12 weeks? What's the return going to look like? There are 2 ways you can do so. You can either just click directly into this warrant. It will take you into the array of tools available on this warrant, including the live matrix tool, which shows you where the warrant is trading live alongside JD.com shares. Just give it a minute. This is my bad. My computer is a little bit slow, not the website. So this is the live matrix where it tells you live, indicated by the blue bar, where the shares as well as the warrant is trading right now. So what this is saying is that currently JD shares are trading between 159 to 159.6, and the warrant is bidding 5.5 cents on the bid and offered 5.6 cents on the offer. So this is the price that you can buy it, and this is the price that you can sell it back at to the market maker. Right now. Now, if you wanted to look at the approximate date that you can hold on to the warrant for, you can either choose the warrant calculator tool or our latest tool known as the exposure simulator tool. So, Joey, this tool must be new to you as well. So I'll just quickly introduce what this tool does. Okay.
Definitely very new. I've not seen that before. Go ahead, Jamie. Wow, something interesting.
Yes. So this is interesting in that, if you were thinking, okay, what if I wanted to invest, say, $50,000 into JD shares? But hey, now that I know about call warrants, and because 20% is a move that, as we know with Chinese shares these days, it can move during the day, it can move in 2 days, right? 20% sounds like a lot for the average share, but as we know in today's volatile markets with Chinese shares, it can take just a day or two to move. Now, if that's the case, you think, okay, I want a bit more leverage, and if I were to buy $50,000 worth of JD shares, typically, what would it look like if I had bought this warrant instead for PW? So I think first of all, we must make sure we're on that right warrant that we're looking at, in this case for PW. With this tool, you need to know exactly what warrant you want to look at, right? So we have done the selector process and it's narrowed it down to 44PW for us. So here, if we wanted to simulate a position similar to if we had bought $50,000 worth of JD.com shares, what we will do is we'll increase the number of shares owned here such that it would look closer to $50,000. Okay, in this case, if you are holding on to 2,000 JD.com shares listed in Hong Kong, you will need to invest about $55,000 Sing into this share. But if you're considering this warrant instead, now this warrant has got a gearing factor of about 4 times, meaning in the short term, it's going to move 4 times more than JD.com shares. Meaning if JD.com shares move by 1%, it's going to move around 4.2%, okay? In that case, you will need to then invest 4.2 times less than if you invested the amount in shares. So in this case, if you use that 55,000 or 54,645 divided by 4.2, it gives you a warrant investment value of $13,000. Now, so again, to repeat, in order to invest into this warrant, you will not be placing $55,000 as you would in JD.com shares, but instead invest 4 times less, taking 13,000 Singapore dollar to buy around 236,000 or 237,000 of this warrant on the SGX. And how will that perform alongside the share investment? Okay, this tool will tell you exactly how. So here, if we put in the share target of $190, what this is going to tell you is, if that happened today, if you had bought into JD.com shares directly, you would have made around $10,500. But if you had bought this warrant instead, you'll make $12,700, right? Why? Because of the gearing effect, where if the share went up by about 20%, this warrant will go up by 98.2%, right? But like I said, if you increase the number of days, time decay is going to eat into the geared return. So what we saw earlier was, in about 12 weeks, it's gonna have less returns, right? So in this case, again, if you increase the number of days, what you're going to see is that the warrant value, the gains, they're going to drop, right? And we want to drop it to a point where it is similar to the share return. So in this case, if you increase it a little bit more, I think until, there you go, a 27-day holding period, you'll find that now the warrant value on your portfolio, okay, your warrant value portfolio, is going to be very similar to the gains on your share portfolio. So what this means is that if you're keen to get into this JD.com, call Warrant 44PW today. If you had bought $13,000 worth of shares, which translates into 236,000 units of this warrant, okay, and if JD.com went up by 19% in 27 days, you are going to make a portfolio value of 10,600, similar to if you had bought the shares in 27 days. But if JD took less than 27 days, right, you're definitely going to make more money with the warrant versus the share. So essentially what this tool does is really two things here. It tells you the approximate number of warrants that you should be buying based on the kind of exposure you're trying to replicate via the shares. Okay, it's telling you how much less you will need to invest in the warrant, but it's also telling you what your maximum holding period is with such an exposure. So if, again, to repeat, if we go up to 27 days, you'll find that now the amount of money you're going to get is going to be similar to if you had invested directly in the shares. So I would say based on this exposure, the maximum holding period on this position should be 27 days. And of course, you can continue holding it beyond 27 days. It's still going to make money, but it's going to make you less money than if you had invested in the shares directly. But in percentage gains, of course, it's still going to make you geared returns, right? It's still going to make you 44% returns if you held it for 76 days. We continue to increase it such that the value, the percentage gain is going to equate that of the shares. In this case, 98 days is your maximum holding period where you still make gains, but it's going to be very little, right? It's going to be 2008 versus if you had bought the shares. So this tool really is to help you address, the maximum holding period, but also the optimal holding period, which is 27 days. I hope this tool will help investors really think about how they can replicate their portfolio of shares. In this case, it's also very useful if someone were to consider a put warrant to hedge, the JD shares. So, for example, if you're already holding on to JD shares and JD shares went to $190, you're happy, you're a long-term shareholder, but you think on the charts, again, depending on what Joey thinks at that point. But if he thinks there could be a resistance there and could go down, in this case, you could choose a put warrant instead and see how, and see how many warrants you need to use to hedge this, this potential downside move. It's going to tell you if you held, say, 2,000 shares and you wanted to hedge on the downside, if JD were to come back, to what it was today. So for example, it was 190 now, right? And you think it's going to come back down to where it is today, 16%. This is going to tell you how you can use this warrant and then tell you how many what the optimal holding period is in order to offset your portfolio loss. So this tool does that for you. Either replicate your position via a call, tell you how many units of those warrants you can buy, or to tell you how many units of those put warrants you can use to hedge on the downside.
Very good, very interesting, guys. So it's not just about like taking a position, right, to make more profits, to increase your ROI, but let's assume you have an existing position on the underlying. What Jamie has showed you was actually how, right, you can just use a much smaller capital to hedge that position in case there's some downside. You can hedge that risk. All right, really interesting. Go ahead, check it out, guys. The link is in the chat, www.warrants.com.sg. All right, so I think we have some questions coming in already. So guys, basically, very rarely I can get Jamie, who is very, very busy every single day, all right, making the market for the warrants and all that. So very rarely I have expert right over here on warrants. So if you have any questions, guys, on warrants, right, Jamie is the go-to person, right? So make sure you type it in the chat, all right? And that's where Jamie will do her best to go through with you as well. I will do my best to answer some of the questions as well. That is for me, all right? But I think we have some questions. Jamie, should we just go ahead to answer some of the questions that?
Yes, I already see very good questions. So, for
Yeah.
example, from Peter, what if the target price would hit before expiry? Now, I think that's a really good question, Joey. Just because I think that's something that we haven't explicitly covered, which is that yes, warrants all have an expiry date. How do I know what the expiry date is? It's stated in the warrant name itself. So, how you can read this is, obviously this is a JD warrant because it starts with JD. It's a put warrant because it says EPW. Now a call warrant will say ECW. Now that's typically followed by 6 numbers after to represent the expiry date on the warrant, which is a year, month, date format. So if you can read this along with me, the expiry date of this warrant will be 3rd of October 2025. On the call warrant that we were talking about earlier, for PW, the expiry date is on the 4th of August 2025. Now, whilst warrants have got expiry date, I hope what I have demonstrated via the selector and also via the exposure simulator is as long as your target price has been met, you should exit right away. And in fact, the less time it takes to hit your target level, the more money you make, right? So when you trade a warrant, you're really hoping that your target value, your target exit value will be hit earlier rather than later. And again, this tool is useful for telling you at which point it's going to lose you money even if your view was right. In this case, if it's going to take 126 days for JD.com to rise by 20%, you're in fact going to lose money. You're going to lose 14.8%. Right, the warrant hasn't expired. It's going to expire soon. But if you held on to it and you didn't cut your loss, or you didn't take your target profit earlier, when it had made you 29.6%, for example, you're going to end up losing money instead. You're going to be in the red. And you're going to be in the red because why? The time decay has basically eaten up all of your geared returns. So it's important to use tools to find out what your maximum holding period is. Now, that is obviously different from if you bought and held a share, because a lot of people, what they tend to do is when their view is wrong, they're just going to cold storage it, right? And hold on for years and years until they break even at least. But just bear in mind that when you use a geared tool or you use a geared financial instrument, it always comes at a cost. And it's actually for shorter term trading, kind of horizons. So you need to know with any instrument that includes warrants, what your maximum holding period should be. And you should never hold it to expiry, because what's going to happen at expiry is, if the shares, in this case, they all come with a strike price. Okay, if the strike price of this warrant, this call warrant in this case, if we were to scroll down, it's 185. Now, if JD.com shares closer to expiry date, the 5 business days before, it averages below 185. So for example, it closes at $180. You're going to get $0 back at expiry. But if you had cut your losses, you're not going to get $0 back. You're not going to lose 100% of your return, right? You're going to get something back. So I think it's very important that you learn how to exit once your target levels have been met. But sometimes even if your target level was met, because the holding period is too long, you're going to lose money. So Peter, bear that in mind. Use the tools. If you're not sure, you can always call us up. I'll be happy to take your call to take you through on the maximum holding period, that warrant should be based on your view. Hope that answers your question, Peter.
Yeah, maybe I can add on a little bit, right? So one thing about warrants, guys, like Jimmy have mentioned, right, is more like a short-term trading instrument. It's not meant for you to just buy and like leave it there for a few months or a few years and don't bother about it, and then hopefully it waits until expiry and then you log in and check what happened, right? No, right? That's not how it works, guys. Basically, for warrants, you want, if you are taking a long position, you want to buy what we call a call warrant, right? Then you want the stock to move up fast. The faster, the better, right? Within a few days or 1 week or 2 weeks, the better, all right? You don't want to hold on to it all the way to expiry, because the longer you hold, there's the holding cost, there's time decay that will set in, all right? So it's not just like buying and leaving it there. Don't do that. You have a plan. You want to take a short-term position based on but a particular stock like JD.com. That's how you use warrants. So you want to make sure that you know what's the time frame, when to get out, right? If a certain time frame up to 2 weeks or a month, all right, it still doesn't hit your target, well, you can get out, all right, you can still make the profits as well, all right.
I think
Okay.
the next question is from Chloe. Both her questions are related. What are the risks with trading warrants, which is also a very good question. But I think she also had a related question, which is what if JD.com shares drop? What is the cut loss there, Joey?
Yep, I think right over here, would that be this one? What
That's right.
if the price of the shares drop? What's the loss? Is that correct?
Yes. So what will the cut loss level? Because we're going to use your cut loss view to also see what the cut loss level will be with the warrants.
Oh, very good. Maybe I could go to share my screen and cover that. All right, very good. Let me just go to share. So basically, guys, when we are talking about a stock whereby you're taking a warrants position, right? You always go back to the underlying stock, because whether you're using warrants or different type of tools, right? It all boils down to the same underlying that everybody is looking at. All right, just that warrants allows you to do a bit of leverage and all that. But let's go back to the underlying. So I mentioned just now, right, based on my screen that 150 would be a pretty good support level, but over the past 1 or 2 months, we have seen some bargain hunting coming back. And if I can quickly turn on, okay, let me just go to show you. I did not turn on just now, but what happens was when we actually had the first bullish signal coming out on 16 Jan, when it was just about 140, it went all the way to 180 and then now coming back down, right? So when we got the first bullish signal, I can turn on this thing right over here called the trailing support line. So that's a very, very powerful tool for my one good trend indicator. All right, let me just turn it on. And you can see right straight away, you can see right now we have another trailing support line. Let me just go back to maybe over here, right? So you can see first bullish signal coming out. We got the trailing support that kind of follow a stock as it moves up. All right, it give it breathing space to hopefully move higher. And one fine day, if you go below the trailing support line, that's where we would have a bearish signal. All right, so if you want to find a bit more, guys, on the entire strategy or this indicator as well, as I say, attend more of those free webinars, but just a very quick run through, right? So same thing, right over here on the 17th of Jan, we got a bullish signal coming out. A trailing support pops out because you can see right over here, we actually went above the trailing resistance. So we got a trailing support popping out and it follows up, flat, up, flat, up, flat. All right, and went up a little bit more and flattening out. You can see that this trailing support line is also somewhere around the $150 that I've drawn just now. You can see, right, just now I joined the $150. That would be like horizontal support level. But the trailing support has also gone up to somewhere near the 150 level. So I think 150, as I say, right, would be a very key support level, right? If we stay above it, right, above 151, 152, we stay above it, I think it still looks pretty okay, right? But just in case, right, just in case we were to break below this trailing support, also where I've drawn my horizontal support, well, then not so good. We would have a bearish signal. We might start to see a bit of weakness in the short term. So where could the support level actually be? So when we first got in over here, right over here, let's say we got a bullish signal, you enter a trade, your stop loss could be below. Let me just show you what I mean by stop loss. So for any single trade, you want to have a plan to get out. All right. Of course, you want to have a plan to hopefully make money. It goes up your target. You take some profit, right? That's the best way, right? But the question is, what if it doesn't go up? What if it comes down? All right. Then do you want to just do nothing and hold on to it forever and then lose a lot of money? No, right? You don't want to do that. You want to make sure you cap your losses. All right. Keep it to a minimum. Get out. If we see a bearish signal, get out. If a certain level is broken, because that's where more selling can actually come back. So right over here, you can see that a stop loss could be somewhere just below, right? For example, below the trailing support, maybe below the 130. But as prices move up, right, over the past 1-2 months, you can see that's where we could shift our stop loss higher. It goes up a bit more, we can shift it higher. Now it goes up, we can shift it a little bit higher. So I would say that right now, if you're looking at the underlying, the stop loss, right, just to give it a bit of allowance, could be just below the 150 horizontal and trailing support level. So what would be below? Well, it could be about 147, 146. I think just give it, I mean, you don't have to put like so near, right? Just right. I think just give it a bit of allowance such that if it really goes below the trailing support, all right, it breaks down and we see it going down some more, all right, to 147 or something like that. That is where potentially we might see a bearish signal. We could even see some selling, all right? And we might even retrace all the way back down to 130, which would be like the next support level. All right, so I hope that helps in terms of like a stop loss level. All right, that's been raised from below 130 now all the way to below 150. All right, because prices and they've gone up, you want to take steps to protect your profits. All right, so Jimmy, back to you. Maybe now based on this, like maybe 147 stop loss level, what would that be for warrants? Okay, Jimmy, I think you're muted.
Yes, hi. So looking back at the warrants.com.sg screen, we're back to the exposure simulator function, where it tells you how the warrants will move with that target view as well as the absolute portfolio return. So what we were talking about earlier is indeed if JD.com shares had gone up about 20%, this warrant in 27 days would go up by 83.3% and generate a return that's absolute return similar to your portfolio share return. Now, what happens if JD.com shares were to go down? Now, in this case, a disciplined investor, a disciplined trader would cut loss so that we can take the loss and then we can take our remaining capital to fight another day with another better stock. But in this case, let's say it goes to about 145 or even 140, right, which is below the 150 support level that Joey is talking about. We think this is a clear break, right, from 150 below 150. In this case, what you see with the risk of the warrant, Chloe, is that this warrant will also magnify the loss, right? It magnifies your return. It also magnifies your loss. In this case, if you had if you had cut loss from today, you would be seeing close to a 12% loss on your share portfolio. But with warrants, it's going to be magnified. It's going to be down 54%. Now, again, going back to the number of warrants that you have bought with, if you had, followed this recommended units of 239,000 units of warrants, what you're going to see in terms of absolute loss is about 6,900 versus a 6,400 loss on the share portfolio. So therein lies the risk of warrants. Like I said, it magnifies your return if you get your view right. But of course, sometimes when we get it wrong, you just need to be mindful that it's also going to magnify your losses. But importantly, learn to cut your loss, right? Because again, if you continue to hold on to it, it's already hit $140, say 27 days from now, but you think, oh no, I'm not going to cut my loss because there's a chance of a rebound. We always think that, right? But it continues to go down maybe now to $130. But yeah, or it stays here and then it continues to, you hold on to it, right? Your loss on the portfolio of shares is not going to change, right? Because $140 is at $140. Still, the loss is still $6,300. But the longer you hold on to this warrant and you refuse to cut loss, even though the cut loss level has been hit, the longer you hold on to it, the more losses you're going to make, right? Just now at 27, when you hold on to it for 27 days, the loss, it's about 5,700. But now if you hold it for 93 days, it's going to, if you hold it for 100 over days, even though the cut loss level has been attained earlier, but you refuse to cut loss, you find that your losses will continue to grow. Why? Because time decay continues to set in regardless of what the share price does, right? It's going to keep chipping away on your warrant value. So that's something you need to bear in mind of, Chloe, the risk. And of course, if you choose to hold the warrant all the way to expiry, what's going to happen is that you're going to lose your entire investment amount here. Okay, so please don't do that. You can, even if it's down 94%, you get some money back, right? And you can buy it via another warrant and hopefully magnify the returns, hopefully enough to offset this loss. But don't hold it to expiry because the risks are the greatest there.
Great. All right. I think that really answers the question. All right. Maybe Jimmy, go on to the next question. Should we? Any questions that you would like to take on?
Well, BKTO here has said,
Yeah.
can you explain the premium and discount of a warrant and what is the conversion ratio and then how would it affect the premium and discount? Well, BK, I assume you're someone who trades options and so you seem to be a bit well versed in the terms of conversion ratio is probably a typo rather than conversation ratio, as well as things like premium and discount. Now, I think when people talk about premium and discount, they're really talking about maybe the strike, the relationship of the strike relative to the spot. So to give you an example, this warrant right now has got, we'll go to the warrant terms, okay? This JD warrant here has got a strike price of 185, like I said, which is higher than JD's current share price of $158.50. So what this means is that effectively this call warrant gives you the right at expiry to buy JD.com shares at $185, right? Above the share price of 158.5. So you imagine, I mean, why would you do that? There's no discount here, right? If the share price was lower than $158, let's say if the strike price was $150, now there's a discount because you can buy JD.com shares theoretically via this warrant at a cheaper price than where the current share price is. But because this is above, there is no discount, right? There is, it's at a premium. So in this case, there's no intrinsic value. The warrant price is therefore very cheap. It's 5.4 cents. It's all time value. It's all premium here. Now, what is the premium? In this case, we represent it as a percentage. Premium essentially refers to just time value. So if you have got a strike price that's below the current spot price, where there's a discount, you'll find that the premium generally is lower, right? Because it's not just time value. There's what we call intrinsic value. That's the discount value. So in this case, there is no intrinsic value. There's only time value. And so, this is really the percentage premium that you're paying via the warrant. But before we get into the technicalities of this, right, the calculations and all that, the reason I've used the tools that I've used, which is namely the selector and the exposure simulator, is that it already takes into account premium. And therefore, what you'll find is that, like I said, there is a holding period that you need to be mindful of, because why? The time value is going to keep eroding as you hold on to the warrant, right? So all that has already been taken into account, BK. And I would say you wouldn't need to overly worry about the premium percentage, because in choosing a warrant, essentially, there are really only 4 steps that we've narrowed it down to. One, your view, your entry, exit, and cut loss levels on the stock. And you do the same via warrant, okay? Use the same entry, use the same exit, use the same cut loss in the stock. And then know your holding period, the optimal holding period that tools like that tell you. In this case, it says here via the exposure simulator is around 27 days, right? And then be aware of what kind of gearing this is, right? Because it can also work against you if your view was wrong. And finally, you always choose a warrant on tight spreads, which in this case, it is a warrant on tight spreads. So BK, I would say this is probably more important, these 4 steps, rather than to get into the whole premium calculation, because essentially you don't need to know that if you're not holding it to expiry, right? You need to know premium if you're holding it to expiry to work out what the spot price of JD.com shares needs to be in order for you to break even. Okay, but in this case, we're looking at returns. We're looking at the cut loss levels, rather than holding it to expiry. In fact, you really shouldn't. So I hope I've gone through the kind of the theory of it for you, where you can find it on the website under warrant terms page, but it shouldn't be what you use in guiding your views on where to enter and exit and cut loss in the warrant.
Very good. Thank you so much, Jamie. I really like the whole 4 steps, right, Jamie, or 3 steps? This
4 steps.
Very good.
Yep. Sorry, and BK, I realized I didn't answer your question on the conversion ratio of the warrant. Over here at Macquarie, we call it warrants per share. The reason is we find that it's more intuitive in that how many of this warrant you need to use in order to exchange for the shares. So in this case, that's why the warrant can be so cheap, you see, Joey. It's only 5 cents, whilst JD.com is costing around about $27 Sing dollar, right? Rather expensive share in absolute $1. So in this case, we've broken it down to 50 tradable pieces, and which is why it's offered at a really low absolute price of 5.4 cents. So the conversion ratio, or the warrants per share, BK in this case, is about 50. Okay, 50 units. Those who want to know a deeper explanation of what these terms are, you can always mouse over the terms here and it will do a simple explanation for you.
Yeah, so go ahead to check it out, guys. The website is in the chat, right? www.warrants.com.sg. All right, so I think that's where all the details are there. You can mouse over to see all the different terms. All right, very powerful. All right, yeah.
Yeah. I think Peter has got another 2 questions. Thank you, Peter. Very good questions. Can we preset our stop loss and target? The answer is yes. Most of us, we haven't got all day to look at the screen to cut loss instantly. So like I said, your cut loss must be based on the shares. So every day, what you have to do is, as you turn on your trading platform, So for example, if you trade with Philip, your poems, what you have to do or tell your Ramizia is that you would like to cut loss when the share is say at $140 honky dollars, right? Which is below $150, the trailing support that Joey talked about. In this case, if you wanted to preset at $140, what you can do is you can come to warrants.com.sg. Like I said, there is a live matrix tool that tells you where the warrant is trading live alongside the share. Now, so you can see this live matrix right now, it doesn't go to $140 because, JD shares are trading about $158. But as it moves down, you're going to see $140. But what can you do if, this morning you're thinking, I just want to put a cut loss level? What you can do is you can either go to the selector tool or the calculator tool. Okay, we're still on this warrant. And today what we can do is we can then preset $140, which is a stop loss. We keep the date unchanged. And what you'll see is going to tell you that the warrant will go to 3.1 cent bid. Okay, so you want to tell your Ramizia, or you want to type on your screen a cut loss at 3.1 cents, because that is where today, it's going to trade if JD.com shares went down to $140. So that's something you can do. Again, alternatively, if you have no time to use a calculator, you're on the go, you just want to know what the price is going to be, the actual live price is going to be when JD.com shares trade $140, just give us a call, 660-0289. Myself or my colleagues will be happy to tell you what the warrant price is going to be when JD.com shares trade to $140, and you can tell your Ramizia to put that cut loss point in. Of course, if it doesn't hit at the end of the day, Joey, I think the system is going to sweep it and clear it, right? So it's going to reset at the end of the day. So the next day, you will need to continue to put in that kind of a cut loss price daily into the system, just as you would have to do it with shares.
Yep, definitely. So basically for warrants, guys, you are able to set like a stop loss order, right? You can place what we call like a stop limit order, all right? Of course, you need to, based on the simulation results, what would the price be of the warrants when the underlying would fall to a certain level, right? So you can do that and set what we call a stop limit order, pretty much to get out automatically, all right, on the warrants if it were to be triggered and to hit your stop loss price. Does it make sense? So that's how you can do it. You can set it online as well. All right. If you have any, no idea how to do it, or not very sure about how to set a stop loss, I believe all of you, some of you would have been, have a trading account under me in Philip Securities. So just reach out to my team by WhatsApp. They'll definitely be able to guide you on that as well. All right.
Yeah.
Okay.
So Peter is again, sorry to interrupt, Joey, but if you wanted to take your profit, it's the same thing. You can find out either on the live matrix, but if it's beyond the live matrix that you're seeing at the moment, you can use the calculator, punch in $190, which is your target. If it happened today, what this shows you is that the warrant is going to be around 10.9 cents. So you can put in your order at 10.9 cents to take a profit, and you can put in your order at 3.1 cents to cut loss.
Yep, very good. Okay, let's see if there's any more questions, guys. I think we have quite a bit of questions, guys, but just going through one by one. I think we've covered most of the questions, but some of the new questions are coming in. Let's see what we can go.
I think Mitch has got a good question. Do you need to subscribe to the website? What's the cost? Mitch, the good news is that it will cost you nothing. Maybe just a bit of a time, right, to use the website. There's no subscription. It's provided free of charge. It's a form of service to warrant investors. Does our website have an app, Peter? No, unfortunately, we do not. I'm sorry, but it is mobile friendly, so you can open it on your phone and surf it. Your other question, Peter, was whether there was there was a session where you can learn more about warrants. Yes, there is. Click on seminar available. It's blinking. Here we have today's session, but if you scroll further down, there is a advanced warrant seminar on 8th of April. So that's a while from now. That's about 3 weeks from now, unfortunately. But if you wanted to know more about warrants in the meantime, there is the warrant education page. You've got 1-minute short videos. You've got FAQs. But of course, the easiest way, Peter, to learn about warrants, again, I've been flashing this more than once today. You can give us a call. We can arrange on how we can educate you specifically on certain questions you might have. So that's my promise to all of you here who have attended. If you have any doubts or qualms about warrants, please always don't hesitate to reach out to us to find out more. okay, to be more aware of the risks as well as the targeted returns that you can aim towards. I will be happy to help you with it.
Yep. I have placed the link in the chat as well, guys. www.warrants.com.sg. Very powerful. Of course, it's free, right? You don't have to pay anything to access the website. All the details are there. You can do the simulation. You can do the Warrants live metrics and all that. Very powerful tool. Go and check it out, guys. All right.
Yeah. Victor has a really interesting question. Is Warrant the same as DLC? Which is better? Well, Victor, that's again, thank you for the question. It is a very popular one because those of you who are familiar with DLCs often say, oh, it sounds very similar to the DLC. So, what are the main differences? The good news is we have specifically a video to address that, to explain to you in a bit more detail in under 1 minute on exactly what the difference is between, you know, a DLC and a warrant. It's under our frequently asked questions here. There is one, but if you ask me what are the chief differences, well, I would say the chief difference is over here. Well, the chief difference is that, you know, DLCs come with fixed leverage, right? So there is the 3 times, 5 times, or 7 times. But as you have seen with my warrant example, I hope you know you saw, with time the leverage or the gearing reduces, but the shorter amount of time that you hold on to warrant and you realize your exit view, the more gearing you enjoy. So within a warrant, you do face, you know, different forms of gearing. But amongst different warrants, what you're going to find here on the warrant search tab, for example, it's going to tell you that you see you've got an effective gearing of really, you know, between about 2.6 times to one that's 11.8 times, meaning it's going to magnify your exposure by up to 11.8 times. Here you've got one that's going to magnify it by 24 times, right? So we've got different levels of gearing that we make available via our warrants. Is not fixed at 3 times, 5 times, 7 times. I think that's the main difference. Of course, you've got other mechanisms known as the airbag. For those of you who don't know what a DLC is, so I'm not going to go in detail. But we don't have things like airbag where it gets triggered if the shares was, you know, down 20% and then, you know, it's suddenly 100% loss. If it was a 5-time, you know, DLC, we don't have that. So these are some of the things that differentiate us from a DLC product. And I think it's always important to know which product works best for you based on your view and trade accordingly. So Peter and Victor, definitely either go online, look at our videos, or attend the seminar in person where we will educate you over some food on how warrants work.
Nice.
Next question from Stephen Pua. Do you exercise the strike price to buy the mother share? No, earlier we talked about the strike price because I believe it was BK was asking what's the conversion ratio and the premium discount. I talked a bit about the strike price. Now, the in this case, while theoretically a warrant allows you the right but not the obligation to buy the share at the strike price, in reality, all structured warrants in Singapore are cash settled. So if you know the warrant, like I said, you really shouldn't be holding on to expiry. But for some people, if you hold on to expiry anyway, what's going to happen is that the time value is going to go to 0. Okay, so it's just going to be that intrinsic value. It must have intrinsic value for you to get something back at expiry. So if you only get intrinsic value if the strike price was below the spot price at that point. There was a discount, right? You can buy the shares at a discount. If so, we're going to calculate the discount, divide it by the conversion ratio, the warrants per share, convert it back to Singapore dollars, and send it to your address that's logged at with the CDP, right? We're going to send you a cash settlement amount via check. If the strike was the same as the spot price or even higher, meaning there was no discount, then it's just going to expire worthless. And you can't convert the warrant into a share and take delivery of the share at the higher strike price. You wouldn't want to do that anyway, Stephen, because that means that you're going to your loss continues to be unlimited in that sense, right? Whereby your loss is not limited to just what you paid upfront for the warrant. Okay, so we don't do a physical exercise of the warrant and give you shares. It's all cash settled. So if you held it to expiry, you won't get the shares. You either get a cash settlement amount or you get nothing back. So you have lost all of your capital. Okay, I hope that answers your question. And next question, Chester, can we do a call and put simultaneously instead of only one direction? Well, Chester, I hope you know by now that when you buy any listed leverage instrument, actually any leverage instrument, you're always going to pay something when you hold on to them, right? So if you buy both, you're probably wanting to use the winnings on one to offset the loss on the other. But just to bear in mind that if JD.com shares isn't doing anything for a while, you're paying holding costs on two warrants now instead of one. So probably not the best strategy. If you're option trader, there is the straddle and all that. Yeah, some people buy a call and put and it's really for another strategy, but you can't do that. Or they short a call and then they short a call option and they long a put option, right? So you can't do that because with warrants you can only buy, right? You can either buy a call or put. You can't short. There is no for any security listed on SGX, you can't naked short the position. So option trading strategies don't apply. So if we're back to say, if you want to buy a call and a put, well, you can, but just know that you are going to pay time decay or holding costs on two warrants, especially when the share does nothing. And in this case, if you were right, in this case, you're bullish. You don't really want to buy a put warrant because the magnified loss there is going to eat into your magnified returns on the calls, right? So already if you've got time decay eating into your magnified returns, now you've got, the magnified losses of the put warrant eating into your gains on the call warrants as well. So probably not the best strategy in my opinion.
Yeah, so I can add on a little bit. I think what Jamie mentioned as well. This is a little bit different from options, guys. I know in options, right? US options, you can sell a call, you can sell a put, right? But take note, guys, for warrants, you can't sell a call warrant, you can't sell a put warrant, right? There's no such thing as the naked short, all right? If you do that, tomorrow morning we'll get an email, all right? And then be very troublesome. It's like a naked short, and we have to try to borrow the shares for you and stuff, right? So it's very complicated. You can't do that in the normal Singapore market. You can't do a naked short without having the shares on the warrants, all right? So very different, right? So I think back to the question, Chester, right? Can you buy a call and buy a put simultaneously? Well, you can, but then it brings me back to the same question, right? Can you buy the stock and sell the stock directly? Let's say you want to take a long position, you want to take a short position, maybe on CFD. So it's like two opposite direction, one buy, one sell, right? And if it goes up, it cancels out the other one. So actually, there's no point, right? There's no point because it goes up because now you're back to square one. So I think basically, all right, if you want to take a position in a stock, whether is it like a long or a short, then you probably have to choose one, all right, based on the analysis of the stock. Because if you are taking like both, then so you just do nothing. It's better than just to take both direction and let time decay chip into your gains or your losses as well.
Yes, thank you, Joey. We skipped a question. There is a question on what is
questions. Yeah.
Peter Low, another Peter, cannot do cut loss on online. What's that?
Online, cannot do cut loss on online. I have no idea. And online.
Peter, you might want to retype that question because we can't understand the stuff. Clear?
Let's move on to the next question.
Sorry about that. Yeah, the next question, Terry Yo. What if there is a gap? What if the stock gapped up?
Nice.
Also very good question. Well, I would say then get out right away. Get out right away. And I think that happened exactly with SGX, right? In the earlier example, we showed how Joey's target exit was $13 or $13.50. But in the end, it gapped and then it went up to close to $14. So what happens if there was a gap? Well, get out right away because your exit level was lower than where the current spot price is. I think, first of all, congratulations. But next up, go collect your returns by cashing out of the warrant. So yeah, you can either enter it right away, but if you did it before market open, what's going to happen is that it's going to take the price that you entered, right, which is lower than where it is because it's gapped out higher than where you think. So maybe always best to put in the orders just shortly after the market opens. So for example, JD.com shares, you can put it in at 9:31. In case it gaps up, then you can actually get out at a higher price than where you are queuing before market. All right. JWTC, what is the minimum required to get into warrant or option position? Well, the minimum amount to get into a warrant, the minimum bought lot, I would say is 100 shares, 100 warrants. So similar to share. the shares. I think in Hong Kong is 500, right, Joey? The
Yeah,
bought
in
lot.
Hong Kong there's a minimum of 500 shares. So Singapore
Yeah.
is
So
100 shares, like
yeah,
like
the
a normal
warrants
Singapore
are
stock. Yeah.
the warrants are listed on SGX, so we follow the SGX rules, which is 100.
Yeah.
Okay, whereas for options, I can't answer you that question. It's really more, on the OTC and or in a foreign market if you're looking at exchange traded options, for example, in a Hong Kong exchange. BK, what if there is no one buying or selling on certain days? How's the warrant going to maintain its price? Very, very good question. Now, with warrants, we have what we call a market maker. So that's where our role comes in, right? We make markets on the bid and offer prices, which is why on the live matrix, you actually get to see exactly where the warrant will move alongside the shares. Now, these prices are offered by the market maker, in this case, Macquarie, and we are obligated to always make the prices there, except under circumstances where the warrant is completely worthless, usually very, very close to expiry, or if the JD shares went for a trading halt, then we're not obliged to make prices because there is no underlying price. Okay. So otherwise we'll always be there, even if no one was buying and selling. Our warrants, they're not like shares, right? They take up because there's a buyer, right? No, in this case, even if we had say 10 million people, somebody putting an order for 10 million warrants on 5.4 cents, as long as JD.com shares does not take up, we're not going to just move up to 5.4 to 5.4 on the bid and 5.5 on the offer. It doesn't work like that, right? The market maker is there to provide the prices alongside the shares, and they will move accordingly to the delta and taking account taking account the conversion ratio, so that we'll move according to the delta per warrant, okay. And not because there is someone buying in size or someone selling it down in size. Yeah.
Mm-hmm.
Okay, and this is probably the last question.
Yep.
We're in a
Last
bit of
one.
an overrun here, but thank you for your
quite a bit of
question.
questions. More than 10 questions today, right? Thank you so much, guys. I think these are all fantastic questions. All right.
Yeah.
I think Jamie has covered a lot of them. I've learned something as well. All right. So yeah, let's go on to maybe the last question. Andy?
Andy, warrant value normally drops 3 months before expiries because buyers are less. Is this true? No. So I've just this is related to BK's question, I think, which is what if there were no buyers in the warrants? Is it just going to drop like with shares, right? If you don't have enough buyers, it's going to come down, right? Where there are more sellers. No, it doesn't work like that. Because the market maker Macquarie holds the inventory. Every warrant will have got a large inventory size. So we will always be there on the bid and offer with enough inventory to offer you to buy or to bid for you to sell back to. The warrants value, they drop according to the time decay, which my tool of, the calculator or the selector tool or the exposure simulator tells you, right? So it tells you, how the warrant value will drop. In this case, like I said, if it was, 12 weeks from now, for example, you see that, yes, indeed, the warrant value has dropped to 7.5 cents versus if the view was to happen 1 week from now, it was 10.7 cents. So you see that it will have dropped from 10.7 cents to 10.5 cents, 2 ticks basically, with a 1 week holding period. So it will drop, and time decay is not a linear drop. So it's not systematic, every 2 days it drops. It accelerates towards expiry. So if your warrant, Andy, was something that was very short dated, so meaning it's going to expire 4 months from now, then you're going to find that yes, the warrant value will drop rapidly 3 months from now in the last month towards expiry, but not because there are very little buyers, right? So warrant value, so here it doesn't take into account whether there are many warrant buyers or sellers, right? It's going to move because there is a time decay, which we can calculate and approximate with these tools, and that is how you can approximate the value drop, not needing to take into account whether they're buyers or sellers. I mean, if anything, the buyers or sellers, whether the force of buying is stronger on JD.com shares is probably more important, because where there is a higher buying pressure, it's going to move the shares up, right? Whereas there are very little buyers and more sellers, then it's going to depress the share price down. And that's why the call warrant is going to drop, not because there are not enough buyers in the warrant. Okay.
Yep. Very good.
Okay, I think that's all the time we have, Joey, don't we?
Yeah.
But Victor has thrown in a very,
Yeah. One more
very
question.
final question. Does Macquarie buy from the seller at a lower price if there is no buyer? No. So, Victor, like I said, if you can tell from our live matrix, it tells you exactly where our warrants will be. So you can just follow this, based on the share price. And if there was no one queuing on the bid, well, there's always us. Therefore, on the screen, what you're going to see is that, on the warrant search page, what you're going to see is there's always a bid volume. Okay, because that's us on the bid. We're always going to be buyers for warrant holders. We're always going to be there, even if there was no one wanting to buy from you. And we will have the volume here. So in this case, we've got 5 million warrants for this Alibaba call, for example. 5 million on the bid, 5 million on the offer for you to buy and sell from. Okay, so don't worry, even if there's no buyer, we will be buying it back from you at the fair price according to the live matrix. We're not going to drop our price just because there are no other buyers here. Doesn't work like that with warrants. Therefore, the role of a market maker is very important. I would say, and also one of the differences between, say, a OTC listed option where if there is no buyer, then you can't sell it to anybody. In this case, we have a market maker who will be buying and selling from you. Okay, so rest assured. So thank you very much for
Very
all
good.
the questions. Joey, it's always such a pleasure. I love it that we've got all these
Thank you
questions,
so much.
Because it's so
Yeah.
important for you guys to also ask questions in order to understand what you're trading. And with any instrument that promises you high returns, know the risks, know exactly how the product works, so that in this very volatile market, you're gonna, hopefully make money from it, right? And know your risks. Okay.
Yep. Thank you so much, Jamie. I believe all of you have learned something today as well. So I think we have covered this stock, JD.com. We've answered quite a lot of questions on warrants as to how you can take a position on the warrants of JD.com. So I hope all of you have got value. Let me know, guys. Just type in the chat, type V for value, If you have got value so far, you know a little bit better of what is warrants, how to pick the warrants, how to look at the live metrics. Just type V for value, guys. If you are a little bit clearer as to warrants right now. Let's see. We have Celia value as well. Awesome. What about all of you, right? Type value, V for value. Guys, Peter, I think we have answered some of the questions as well. Value. Thank you so much. All right. Stephen, value. Victor, value. Okay, so very good, guys. I think some of the questions would be like a little bit more on the strategy. I think Wai Chan, you have a question, right? Besides the slope of the MA, the moving average, looking at a few potential bull or bear stock chart. How do I know which one has a steeple run? I think your question is a bit more on the strategy part. All right, so as I say, guys, today the whole entire live show is to share with you guys the one good trade. All right, basically one stock, one Chinese tech stock. You can put your watch this, and Jamie has came out and talked a bit on warrants on it, right? So if you want to find out a bit more on the entire strategy, right, the one good trend strategy that I've been using for more than 10 years now, all right, and also how perhaps you could have an indicator like this. Turn it on, turn it off, get the bullish and bearish signals showing up on any single stocks, any asset classes in seconds, right? Well, attend one of those free webinars. I've just placed the link in the chat one final time, all right? And that's where I look forward to share you guys a bit more, all right? So thank you so much for all of you being over here. A lot of value. Thanks, Jolly, as well. Catherine, value. Chloe, value. Chi Sing, thank you so much as well. All right, Jamie, it seems like there's just one more final question, and this looks like a very advanced question. JWTC.
JWTC clearly is an option trader. Does implied volatility affect the warrant prices like option prices similarly? Answer is yes. So generally, implied volatility, the higher they are, then whether it's a call or put warrant, it's going to go up. And then if it drops, it's going to go down, which is why on the warrant calculator page, we do have a variable here that a user can play around with, increasing and decreasing the volatility to see the impact on the warrant price. So that is something we don't cover in detail over here because, how can we tell what the volatility is going to do in JD.com options, which the market maker uses to hedge with? Generally, if you have heard of the VIX, for example, JWTC, where it measures, all the S&P options listed in the US. In the Hong Kong market, there is a very vibrant exchange traded option market where you've got JD.com options listed, Alibaba or options listed, etc., etc. So how we hedge as a warrant issuer is, apart from buying the shares, we also buy the options there, right? And what we find is that if the options implied volatility over there on the exchange traded option market increases, we will be very likely to also increase our implied volatility. Of course, if there was a big move. But the day-to-day move of, say, like if the option went up by 1%, will we also jack up the warrant implied volatility by 1%, thereby making the warrant more expensive? The answer is no, we're not likely to do so. But if there was a big move, and I think the last time we saw an explosion in implied volatility was actually in October, where the Hang Seng market really exploded from, I think 16,000, right? And went up. So during those kind of very violent moves, yes, you're going to see implied volatility in the warrants, or what we call remarked higher or lower. But the day-to-day, the implied volatility moves is actually so little, and therefore the impact on the warrant price is actually very little. If there was a specific example you wanted to look at, you can always give me a call at 66010-289, or drop us an email, info@warrants.com.sg. We'll be happy to address it. But of course, JWTC, we're happy to have you at our advanced seminar on 8th of April as well, where we will cover the concept of implied volatility in greater detail, both the theory of it and the practical aspect of it, which we have no time to do on this presentation. So sorry about that, JWTC, but I hope my simple answer to your question works.
Okay, very good. So do join the advanced webinar, all right, DWDC, all right, and I'm sure
Seminar.
you will. Yeah, seminar. Sorry. Yeah.
In
yeah.
person,
Okay,
over
good. So I
food.
think- yeah. Okay, so that's it, guys. Thank you so much for joining us today. We've gone on for more than an hour. All right. I hope all of you got value. Thank you so much, Jamie, for being here as well. All right.
Thank you.
Bye,
Always a pleasure,
everyone.
Joey. Can't
Yeah.
wait to revisit JD.com the next time we do this One Good Trade show, because you've been on fire, right? Your SGX idea, and hopefully this will be the other idea that would make your followers quite a bit of money. But just remember
Let's hope
also
so.
the
Yeah,
cut loss
hope so.
levels
Hope so. Looks pretty good.
if it
Let's
doesn't
hope that
happen. Okay.
let's see how it plays out. Yep.
Okay. See you next time, Joey.
Bye. Bye,
Take care, all.
everyone. Take care. Have a
Bye.
good weekend. Bye bye. Bye bye.